My name is Chinyere Inya. I am a partner at Future Africa, just in the last couple of months. I'm also the strategic advisor at Amplify Africa as well. I am going to introduce our panelists. We'll have maybe 40 minutes of discussion, and then I'm going to open it up to this group for any additional questions. It's really nice to be back. I'm actually graduated from Georgetown with the Master of Science in Finance last year this time. So for any of the graduates that are in the room, congratulations to you. Yes, absolutely. Give them a round of applause. All right, I'm going to introduce our four panelists that are here on stage. First, we have Carissa Suleiman. She's here right, to my left. Carissa is a VC investor and tech entrepreneur with over 20 years of investing in and growing tech-driven startups. She's the co-founder of the Continent Venture Partners, an early-stage venture capital firm with 29 portfolio companies, empowering tech entrepreneurs across Africa. As an entrepreneur, Carissa also founded Call Key Networks, a satellite-based communication company focused on corporate clients in East Africa. She also established the American Chamber of Commerce in Kenya, the largest professional business organization in the country. Carissa's experience spans multiple industries and sectors, including fintech, technology, information and communication tech, aviation and finance, from startups to mature multinationals and business turnarounds. She's from the US. Let's give Carissa a round of applause. Next up, we have Dr. Franny Latier. She did our fireside chat earlier this morning for anybody who was here. She's a senior partner and CEO of Southbridge Investments. She brings a wealth of experience having supported entrepreneurs across Africa, in addition to her leadership roles in multilateral private and the not-for-profit space. She currently holds several high-profile governance roles and recently chaired the G20 panel on capital adequacy of multilateral development banks. She's from Tanzania. Give her a round of applause. Excellent. Next up, we have Eric Osiakwan. He's the managing partner of Chanzo Capital. He's an investor and developer of new businesses with 20 years of experience spanning 32 countries in Africa, gained through a number of successful tech startups. Eric is the leading pioneer of internet servicing in Africa, having worked in multiple countries building internet service providers and ICT businesses, similar to Carissa. Some of his successful exits include iBurst in South Africa, 12net in Uganda, Busy Internet in Ghana, 12net in Uganda, Busy Internet in Ghana. Eric also founded and ran Africa ISP Association for 8 years, during which the ISP industry grew by almost 120%. He then moved on to leading efforts to build submarine cables on the continent. He was also part of a public-private partnership in Kenya that built and launched Team Submarines fiber cable, the first to connect East Africa to the rest of the world. He subsequently contributed to building the terrestrial fiber networks in Ghana and Nigeria. He is from Ghana. Welcome, Eric. All right, and we have Nenad Djordjevic. He is a financial entrepreneur who focuses on access to finance for underprivileged entrepreneurs, as well as small to medium-sized companies throughout sub-Saharan Africa and the developing world. He also sources capital for larger projects in infrastructure, telecommunications, agriculture, and healthcare worldwide. He's currently working on several projects in Africa in the areas of financial inclusion, fintech, agriculture in South Africa and Nigeria. He is from Serbia. Let's give him a round of applause. So I needed to read all of that because we have quite the panel and want to make sure that we all understand who is in the room with us today. So again, thank you everybody for being here. Again, with this year's conference theme focusing on harnessing opportunities for a prosperous continent, generally, it's really important for us, I think, when we're in these conversations to understand our vision, right? We're focused on the African continent and we're all here because we have some sort of vision around it. So that's really where I want to start for the audience, is help us understand what your vision is for Africa. Also, help us understand what you're doing, right, with regards to the work, either in private equity or VC, what you're doing in order to advance that vision. So, Nenad, let's start with you.
Can you hear me?
Yes, we can.
All right, very good. Well, in terms of industries, I think just because of what you said, because of the demographics on the continent, I think Africa needs to solve its energy issue first. So electricity generation and power infrastructure, I think that's where I see most of the capital going in within the next 5 to 10 years for sure. Also, electricity generation, yes. Agriculture, and I personally think that workforce development and education will be good areas for investment within the next 5 to 10 years. And I would also love to see Africa stop in its most important export, which is talent or human capital. And we definitely want to help in that any way we can.
Absolutely. Thank you for that. What about you, Carissa? Set the picture for this audience on what your vision is for the future of Africa and what you're doing within your venture capital firm to help advance that vision. Yep.
Okay, I will use the microphone. Is that better? I would say it's the continuation of the digital renaissance that we've seen over the last 5 to 10 years. So we founded the Continent Venture Partners in order to invest in the next generation of African founders that are building transformative business, sorry, that are building transformative businesses to drive impact and outsized returns. Thank you. I have mine. Of course, I'm going to start coughing the moment I start talking.
It's okay. It's all right.
So, if you look at the size of the digital economy right now, it's $138 billion. I'm going to start with some statistics. And it's going to grow to $712 billion by 2050. That's a 6 times increase. It represents 8% of GDP, over 3.2 million jobs to date, and $16 billion in taxes. So, the future and economic transformation in Africa is definitely rooted in this digital renaissance. And that's where we see investing in tech-driven startups, whether it's health tech, fintech, market enablement, or, as you said as well, job training, and really focusing on helping bring the talent back to the continent and building the talent on the continent for the future, training, recruitments, and payments. That's where we're going to see the continued economic transformation, and that's where we're betting heavily in our investments moving forward.
Thank you for that. What about you, Eric?
So thank you so much, and I want to build up on Carissa's points about the numbers that drive the digital economy. 70% of Africa is below 20 years, and that generation primarily seeks to technology. And according to the UN, that population is going to quadruple. So in the 21st century, Africa is going to be the biggest market in the world. And the majority of that workforce is going to come from Africa, and it's a very young population. And within that nexus is the entrepreneurs that are building the new businesses that will drive economic growth. So that's why we are investing in those entrepreneurs. But for us, we look at it from the perspective of our experience, and I'm an ex-founder. I built some of the early connectivity businesses, so I have a fiduciary to pass it on. And that fiduciary is more about building, from a network stack perspective, the application layer. So today in Africa, the most remote part of Africa, there's a phone there. If you can now build services that those people can use, then you can start unlocking the value in the phones that they have. So there's an economic value that is latent in the most remote parts of Africa, but we need to be able to unlock that. And this is where we look for entrepreneurs that are driving services to these markets. And we apply what we call a low margin, high volume. We look for low margin, high volume business models. And so these markets are markets that perform, but because we don't understand that, we call them bottom of the pyramid. We use all this, words. But the reality is that these markets actually adopt technology even faster than you and I, that have the best education. Right, anyway, so our thesis, go after the entrepreneurs that are driving this market. And, Carissa sort of gave you the numbers, but we think that they are more than that, because a lot of these studies don't look at those markets. So there's a lot of opportunity from a market point of view, and those markets are huge across Africa. So to summarize, our vision is to really, in the first phase, we've helped entrepreneurs that come to us with ideas. We give them the early funding. We provide them capital, capacity, and community, which is help them get to revenue. In the phase 2 of our funding world, we are now looking at how do we help this entrepreneur scale these businesses, right? So they become market leaders in one country. How do they go into 4 or 5 countries? And this is where the nexus of our fund is the scaling of businesses in Africa, which is not easy, but it's necessary to create multinational businesses that we believe would drive the digital economy across the continent.
And Dr. Franny?
A lot has been said already, so I'll say 5 things. The future of Africa is young, so education, health, and all the things that come with a younger population. The future of Africa is fun, entertainment, sports, creative industries. The future of Africa is digital. We already have proven that, so it's just going to grow. The future of Africa is green. We'll do energy very differently from the rest of the world. Transport, e-mobility, we can do that because we can, right? We haven't many other solutions, so we can. And the future of Africa is networked, interconnected countries, trade. So those 5 things drive our investment philosophy. We focus on creating digital banking platforms that can provide the services that would be needed for a networked digital young continent. We focus on supporting health companies that have to deliver the last mile solutions. We invest in sports because, as Ned said, we don't want to lose talent. Every team you look at around the world, the top players are from Africa, but Africa is not generating the level of GDP that it can from sports. Sports is 5% of GDP in the rest of the world. It's only 0.5% in Africa, so huge potential. And then, of course, we have the richest natural resources in the world, the largest remaining contiguous undisturbed forests in the world. So the future of carbon is African. And so we invest in reforestation, land restoration, agroforestry. And then finally, of course, because the young entrepreneurs need capital and they need working capital in addition to growth capital, we offer science-based solutions to speed up the process of issuing capital to the most needy parts using psychometric testing, machine learning, and all the latest that science can deliver for that. So our vision of Africa and our investment strategy are correlated.
Excellent. And hopefully that's helpful for everybody here too to understand, right? The vision of when you have VC and PE, these are people that are generally shaping the world by the kinds of investments that they're making, right? So it's really important to understand the vision that they have. So now let's bring that vision down to reality, because we're in a current economic environment that's making it quite challenging to be an entrepreneur that's raising money in the world today. If you guys can all think back to 3 years ago when we were stuck at home, felt like a little bit of the Twilight Zone, but we're all stuck at home, and now the ramifications of COVID have somewhat created the situation that we're in today. You had countries, right, closing their borders, disrupting supply chains, and again, we're in a current economic environment that's making it challenging to raise money. So what is the advice that you're giving to the entrepreneurs that you encounter who may have been able to get higher valuations for their business, right? A year ago, 2 years ago, 3 years ago. Talk a little bit about that. Maybe Eric, we'll start with you, and then we'll go to Carissa.
Thank you very much. So during COVID, we had our portfolio mix, was very interesting. We had a company, an edtech, that nearly shut down before COVID. I remember sitting with the founder, a company called eCampus, became profitable last year. And I told the founder, look, if you don't give up, let's try it one more year and we'll fund. And then COVID hit, and guess what? Actually, the Minister of Education in Ghana did a press conference during COVID and announced that they're going to use our platform for the entire educational system in Ghana. And we've been trying to get the minister for the last 3 years. So suddenly COVID hits, and our platform is the platform. And then 2 years later, the company is profitable. We had another portfolio company called Hotel Online, which is a travel tech company that was doing very well, and COVID hits, and the numbers all go. And so imagine helping these two companies, and this is just an example of our portfolio. But what we did during COVID and last year now is building resilience into our portfolio and helping these companies go through this period. So we've come out of COVID and we now have 4 portfolio companies that are profitable. We got one last year. We had 3 before. All those companies have recovered. Some of them are better than pre-COVID numbers. And then we are co-investors in 2 companies, which is the last 2 examples I'll give you. One is Ampit, which is sort of an artist discovery platform that we thought during COVID will be challenged, but actually got the biggest growth during COVID. And then the last company is FinAccess, which is a platform that allows for informal savings and lending groups to qualify their members and then provide funding to them. And yes, in the case of FinAccess, when COVID hit, they had a bit of a slow because a lot of these guys were not making their payments. But 6 months after, things picked up again. Right? So the big thing for us, the big learning from COVID is that you need to have a different approach for every company. And as a firm, if you didn't have that internal ability to help the businesses, then you're not going to be able to come out. And we've seen some firms collapse, investment firms collapse during COVID. But for us, what really was a big advantage we had was our operating experience. So I came into investment through the back door. I'm not a finance guy. I don't look at companies by looking at numbers, but I look at companies by looking at the entrepreneurs. And because I'm an ex-founder, and my colleagues, we're also ex-founders, we also have finance guys in the team. But our core offering as a firm is the capital, is the capacity and the community. And we believe that that is what is going to differentiate us going forward as a firm.
Excellent. What about you, Carissa, in terms of you're working with entrepreneurs who might be coming to you and you're giving them valuations that they might not necessarily be thrilled or happy with? What is the advice that you're giving them, just given the current economic environment?
So, I mean, the first thing is I think everyone should realize is that a high valuation is a double-edged sword, right? It means it sets an expectation that you better make sure your business plan is going to achieve. So, looking back, first of all, we launched our first fund in, January of 2020, thinking that we're going to be on the continent, deploy the capital, meet with entrepreneurs, provide hands-on experience, because like Eric, we're also founders. We received venture capital fund from one of the first African VCs in the early 2000s. We used that to scale a tech-driven business across the continent, providing satellite communications for voice, data, internet, and banking networks. So we knew how to scale across the continent. We knew how to put operations in place to support the founders to achieve their vision. And so we have the operational expertise to grow our portfolio companies. So all of a sudden, March, we can't travel. We had our office already established in Lagos. We already had our office established in Nairobi. I was based here in Washington, D.C. And it was astonishing and a great testament to our founders how quickly they were able to pivot to online platforms, to do the due diligence, to have the conversations, to dive deep. And we were still able to offer that operational expertise remotely because we did have such solid on-the-ground presence. So that being said, in 2020, so we invested, I think, 8 businesses in 2020. 2021, we did another 5 or 6, and then 2022 comes around, and the first half of 2022, I mean, if any of you founders are in the room, you guys went crazy with your valuations. We were looking in 2020 when we first started, if you had a minimum viable product, you had some traction, maybe you had a pilot, maybe some revenue, valuations were $4-6 million. You have a great concept, we can see your path forward. All of a sudden, early January 2022, people are saying $20 million before they even have a MVP, and not revenue generating. We have a great idea, it's worth $20 million. Again, double-edged sword, because until you can go into the market and have a proof of concept, it's not worth $20 million. And so now we've seen a lot of people that have raised money in that environment at these high valuations, thinking that they can also, on the other side, do the Uber model, where you're gonna just throw cash at a market to try to grab as many people as you can. Well, people are being let go now over hiring, shrinking of company employment. So that's, we always say, double-edged sword. So then when we look at our investment strategy from middle 2022 to now, is that we only want to be on the cap tables where people appreciate the expertise we bring to the table. So we will look at valuations based on, can we grow that? Is that sensible? Does it make sense from a revenue standpoint, from a traction standpoint? And the entrepreneur sees the value that we can bring to the table to achieve the vision that he or she has. And that's where we are investing right now. So the advice we're giving is be realistic, raise more than you need, which I know is counterintuitive in this market when people are having challenges, because we don't know what the next 12, 18, 24 months are gonna be. So you better have 24 months of runway. And that's what we're telling everyone. And have a plan that if we're still where we are in 24 months, that you can extend your runway and know what downsize looks like. So that's where we're looking at right now.
Makes sense. And I mean, I think for anybody in the room who's an entrepreneur or aspiring entrepreneur, it's good advice, right? And a good framework to think about. You had additional comments there. Go ahead.
Just a quick one. I mean, no one mentioned valuations are, dictated by the market. And it's also, we should look at this from two different perspectives. I mean, you as an investor, you want that valuation to be as low as possible, obviously. But if you're giving advice to an entrepreneur, just do what you do best. And, the money will be there, maybe more a little bit later, but it's the customer base and revenues are the two most important things that I would advise them to do. I mean, everything else is dictated by the markets, and you can't really affect it.
Makes sense. So one of the things, I think good advice for an entrepreneur, I think that in this room too, one of the ways I was framing the conversation for the panelists is, I know that I've talked to a handful of you about being an entrepreneur, but I hope that there are some limited partners in the room, potential GPs, and that we're looking to raise the next generation of general partners of your own funds, right? Because we need more Africans with access to capital, giving capital to those entrepreneurs that actually need it. So have that kind of framing in mind. Over the next 10 to 15 years, many of us have heard that statistic about the African continent that says, right, the average age of the population is very young, and it's only getting younger. I think that the counter to that doesn't maybe always get discussed is about the aging population throughout the rest of the world, right? So while the continent is getting younger, you have the Asian population getting much older, Europe and across the United States getting much older, having on average less than 2 children, barely replacing ourselves essentially. You have another statistic that came out the other day that said by 2035, half of the world's global population will be obese. So in addition to the aging population across the rest of the world, half will be considered obese. Another statistic just around, actually not a statistic, but just all of these advancements in technology, right? With AI and machine learning. Just think about in the next 10 years, 15 years, what is the world gonna look like, right? What the world is gonna look like drives what we're investing in today. So that's the next question that I have, and I wanna kind of kick it over to you, Ninad, and then over to Dr. Franny. What trends are you watching? What are you looking at? And what are you investing in, right, today as a result of that picture that's gonna come to in the next 10, 15, 20 years?
I already said before, workforce development and education are the trends that I'll be definitely watching for the next period, for the next short-term period. Also, the rate of technology adoption and the influence of new technologies and how well they're accepted and developed in the continent. That's how we're looking at as well. Also, healthcare. Healthcare would be a big thing for us, and we're working with several companies in several different countries, trying to apply new technologies to healthcare and medical services as well.
Makes sense. I mean, think about if we're talking about young population, education, being able to train the workforce, being able to train very quickly. So that's definitely one big component. And then on the healthcare front, if we just talked about that dichotomy, younger people and older people, that disparity getting wider and wider, healthcare is going to become more and more important. Dr. Franny, what are you looking at in terms of trends within your organization, and what are you guys investing in today as a result?
So we see a number of things that put Africa quite uniquely compared to the rest of the world. You mentioned already its youthfulness. Mm-hmm. By 2050, 1 in 4 persons in the world will be African. And with these statistics, the median age now in Africa is 19 years old. So in the future, to be young will be to be African. So what does that mean? Mm-hmm. So for us, that's the starting point. You are investing in youth because the world will be youthful, but to be youthful will be African. That's quite mind-boggling, right? So we invest in things that youth need. Unfortunately, we don't do education. I mean, we have great colleagues here who work in that sector. We are looking at, you'll not have a job, you'll have an activity. So how do you fund activities? That means access to working capital. That's why we focus on digital working capital solutions. It has to be fast, it has to be voluminous, it has to be cheap. Then the second thing that puts Africa apart, we are a large continent, contiguous continent, the largest in the world. And we have assets that the rest of the world needs. Of course, minerals, which we all know that drive the fourth industrial revolution, like lithium, cobalt, and so on. But then the forests. As the world transitions away from fossil fuels, it's going to need carbon sequestration. Where is carbon being sequestered today? In Africa. So we look at that market and we look at how we can invest in it, creating the assets, certifying them, and making them available for trading, so that the rest of the world can burn more fuel for a few more years, while Africa once again saves the rest of the world. Because we've been doing it, right? 3% of emissions are coming from Africa, but today Africa receives only 3% of climate finance. So we are trying to bridge that gap. Third thing we see that puts Africa completely apart from the rest of the world is we have a continent that can be 100% self-sufficient in everything. Food, energy, jobs, name it, Africa can be self-sufficient. So the continental free trade area is a huge opportunity, and we look at investing in the backbone for trade, which is the banking system. You'll be surprised to see today there isn't a single foreign intermediation bank in Africa. They've all left. So Africa has to solve its own banking intermediation problems. That means digital. Look at the African economies today. 46% of African countries have been downgraded by the credit rating agencies. Ghana's cedi, compared to the US dollar, if you're investing a portfolio in Ghana, you've lost anywhere between 10 and 40%, depending on the sector you're investing in. So we are looking at how do you not need to depend on those currency exchanges, which means digital payment platforms that work across countries. It means access to credit that does not transcend beyond your domestic local currency, that looks at trade that can happen across countries without having to go through foreign exchange, which you have to pay going in and coming out, takes away more than half of your profits. So all those are depending on the digital platforms, and that's why those are very important, and we are putting a lot of effort in those. But then the last part, and I think here I wasn't joking when I said the future of Africa is fun. It is, and it comes to your question about obesity. Sports. We are the continent that is generating the talent. Sports are important not only for entertainment, but also for health. You look today at the spending in the urban environments, whether it's the gym or other health spending, it's growing like crazy. You look at people who watch sports on television or participate in arenas to see a live game, or even digital sports, it's growing like crazy. So the entertainment side, the health side, and the occupation side are equally important, and that's why we invest in that area as well. And then lastly, it's health. The problem we've had with COVID, and we learned a lot. I don't know where you were when COVID was observed to be this massive risk we're facing. We panicked in Africa. We said we are going to die like flies. We didn't. We did it. We solved it, right? So, I mean, I know we're sitting here blasé about this, but there was a massive thing that the continent did where we did not die. We solved it, right? We solved it. And to me, this is really fundamental because it showed how important the last mile health solutions are. And what made us stand apart? Take a country like Rwanda. Everything was digitized around COVID, the testing, the follow-through, the vaccination. So we know the digital technologies can help us figure out where the disease burden is. It can help us identify whether solutions are working or not, but it will also be the mechanism we use to transfer resources when they're needed. Governments use those digital platforms to send money into people's wallets. Can you imagine what an average family in Côte d'Ivoire would do without the digital wallet? The government was able to transfer very quickly resources to the families to buy food because the supply chains were cut off. So you didn't have imports coming in, you didn't have transportation because everything is locked down, and you needed those digital wallets to work for people to just do the basic things. So now we know how to do it. Say, okay, we've solved it for COVID, and I think as Eric was saying, the companies that survived COVID are even more resilient today, which means what we learned during COVID can be scaled up and make Africa even more resilient going forward. So these are the areas we are investing in. And I say this with huge optimism, but also from a point of caution because we were really scared. I don't know how many of you are on the continent, but we were really scared. And fear is a great motivator, just as is optimism. So that's maybe the investment philosophy we have is how you drive optimism and fear to get results.
Definitely. I mean, there's a lot of really good trends that she mentioned there. And I want to stay with you for a second because you brought this up and it was brought up on the last panel too, as far as the emissions that are coming from the continent, yet the responsibility that's also placed on the continent to also do something about it as well, right? So I think you said it was about 3% of global emissions are actually coming out of the continent relative to other regions. I heard a statistic the other day, I listened to The Problem with Jon Stewart, and a fact he mentioned was that 100 companies are responsible for 71% of global emissions. 100 out of the thousands of companies that exist, right? So relative to that, and on your point, can you talk a little bit about when you're making your investments, kind of how you're viewing the climate change discussion on the continent, and are you holding, your entrepreneurs to any sort of metrics around those, or just kind of how you're viewing that when you're making your investments?
So we, as a company, took very early the decision that we will be a responsible company. So we are PRI certified. And we also said we would not deforest. So we signed up to the No Deforestation Initiative, FSDA. And the reason we did that is because when we look at the kind of companies that we want to invest in, they are small and medium enterprises or micro enterprises. And therefore, you can actually decarbonize them for those that are in the carbon space. And those that aren't, you can grow them in a green economy. And so this is a unique opportunity for Africa to grow differently from the rest of the world. But we also know that we do have economies like Nigeria and Mozambique who are dependent on fossil fuels. And therefore, the transition is going to be hard. If you immediately transition from fossil fuel, you'll get a lot of people who will suffer on the continent right now. So we look then at the solution for that. And if you are 3% of the emissions problem, but you are a large share of the sequestration solution, that means Africa can actually sequester every carbon ton that it produces. So how do you then get that mix right? And that's the other part that we focused on, to say there is a way by making sure we reforest. And it's not just forests, it's also grazing lands, because Africa, again, the protein content is going up. So to improve nutrition, you have higher protein content. That means more grazing land if it's animal-based. Therefore, you need to restore grazing lands. We have the richest mangrove swamps in the world, the mangrove forests. Those are the best sequesters of carbon. So restoring them in countries like Cote d'Ivoire, Gabon, in the coast of Zanzibar, and so on. And that gives you livelihood, because mangrove has a very hard wood, so you can use it for construction. It's very good for firewood in the interim until we get electricity in every household. And you can then do it and preserve the ecosystem that is so important for the life species around the mangrove areas. I don't know how many of you have seen elephants on the beach. It's only in Gabon, because the elephants can't go back to the tropical forest because of the mangroves. So they have to walk down the beach and then go back to the forest. So our carbon sequestration is gourmet carbon sequestration. Why? It has elephants in it, right? You can have eucalyptus trees anywhere in the world, but where in the world would you have rhinos and elephants and you are sequestering carbon, right? So we have a lot of very unique things. Ecotourism is another area. So yeah, I mean, I want to excite you to come and invest in Africa if you are wanting to not do that, but come and invest in Africa if you haven't already. But come and invest in Africa, because by investing in Africa, you are investing in the world and the future of the world, because of these factors that I mentioned.
Absolutely. So again, this is the room. Yes, after that. In addition to entrepreneurs, we have limited partners in the next GPs. So take that advice seriously. Anybody else want to comment on that, just around how you're investing, just given all of the conversation around climate change, the investments that you're making, sustainable investments, how are you measuring those? Anybody else want to comment on that?
So, so generally our thesis is around looking for what we call category defining entrepreneurs. So sectors that, nobody's there and they go and, so in the area of clean tech, we just invested in a company called Ben in Ghana. And Ben has built a blockchain platform, and they are now working with Oko Forest in Ghana to use blockchain as a way to basically map out the carbon footprint so that it's immutable. And they've done that in the land sector. So they work with the Lands Commission in Ghana. So very soon in Ghana, if you buy land, it's going to be on a blockchain pattern. And so I will know that you own this segment of land. So I cannot sell it to another person, which is really the problem when it comes to land administration in Ghana. So we generally, what I'm saying, that we look for entrepreneurs that are using technology to solve critical problems, right? So, when it comes to climate, this is sort of the way that we're looking at, we're looking for entrepreneurs, we're looking for these kinds of entrepreneurs. Because we really believe that the value in technology is its application to solving problems, right? So Ben is using blockchain, and they put in machine learning. And then we've also now done an investment in the tourism space. You talk about ecotourism. Tourism is really big in Africa, but I don't know if any of you have seen any tourism startup. 10 years ago, we invested in a company trying to solve this problem. And that company didn't work in Uganda. And then we doubled down and invested in an entrepreneur who's solving the same problem, which is, if you look at the tourism space, the real guys that deliver the tourism experience in Africa are micro merchants. Either a one-man business or a family, a guy has a truck, he takes people to the safari or take you to bird watching, it's a one-person business. But these businesses, they get, the big tourism tour aggregators, they put the trip together, they charge you $5,000, and then they pay these guys $20. But the guy is the one that really delivers the experience. But the reason this guy doesn't get the real value is because he's not online, he's not visible. right? So I've always wondered, I mean, the tourism space is huge in Africa. How come these tourism merchants, which are really a lot of the businesses in Africa, don't get the value that they need? So we invested in a company that tried to solve this problem 10 years ago, and then the company failed. But I still thought somebody should solve this problem. So in 2020, I went to Uganda, and one of our company was scaling to Uganda, so I went out with the founder. Anyway, long story short, I met this founder who actually was a micro merchant and faced this problem. And so he ended up selling that company and then tried to solve this problem, right? And so we ended up investing in Prosperous, which is one of our latest and our first investment in the tourism space. And what they're really doing is trying to build like a Shopify for these merchants, right? And allowing them to come online and then driving traffic to them so that they can accept electronic payments. Within 3 months, they have 500 users already. And it's all viral. They've not done any marketing. They've already opened an office in Kenya after launching in Uganda. Right? So this is another category defining. And I'll give you a last one that we just invested in. It's a company called SaveUp in Kenya. Today in Africa, when you take fintech, everybody is lending, buy now, pay later, or pay maybe. And this borrowing culture is taking over Africa. The point is, who is saving? The US, the reason why the credit system works is that people save. But the saving culture in Africa has not been enabled. Everybody's borrowing and borrowing. Anyway, we never invested in any of those companies. Right? But we found this guy who is really trying to figure out a way where at any point of transaction, you can convert your spare change into saving, right? So they give you an app where you opt in at any point of transactions. Actually, there's a company in the US that is called Acons, or Chums. But he's trying to figure out a way to do it in Africa where even with mobile money and with cash transactions, you can convert your spare change and save it. Now, what this means is that suddenly he's going to have a hugest repository of saving culture, how people save, which we think that defines that category. Anyway, so this is the kind of entrepreneur that we're looking for, and this is how we assess the opportunities. And we think that these opportunities cut across the continent and, the common market, etc. So if you start in one country, you can replicate it across.
Amazing. And I know we're running a little bit short on time, so I've got 2 more questions. If they let me, I'll see if there's any audience questions as well. One of the questions that I had was just picking up on a point that you made, which is around who do you invest in and how do you find them, right? So a lot of who investors invest in is shaped by our network, shaped by who we're connected with, and that can be somewhat limiting, right? So I wanted to ask you, maybe starting with Carissa and then over to you, Ninad, how are you finding your entrepreneurs that you invest in, and are there things that you could do to maybe expand where you're looking for entrepreneurs and how you're looking for entrepreneurs? So one, where are you finding your entrepreneurs, and then are there things you could be doing better to expand that view?
So 2 main avenues where we find the entrepreneurs with whom we invest. One is our own network of entrepreneurs. I would say 90% of our pipeline comes from existing portfolio companies. Founder making an introduction to a friend who's raising starting another company. A co-founder in one of our investment companies moves out and starts another company. So most of our investments come from our existing entrepreneurs. We also do have what we want to, an ecosystem of like-minded investors. So there's a group of us that invest together through most of our portfolio companies. And that is also a significant portion of where we find our founders, is through our existing co-investors. And I think we're really working on building a much stronger ecosystem of like-minded investors across Africa to invest in and scale businesses, as Eric has also explained. What can we do more? That is an interesting question. I think it's something as a VC industry, we need to look at when you look at the statistics of who gets funded. We actually, are over 45% female founded on our portfolio. We are also predominantly African founders. Within our own VC, within TCVP, I'm the only non-African on the payroll, so to say. So, you know, we do have a significant network on the ground, and we use that, and we do look for diverse founders. And I would love to hear during the question and answer session if any of you have any ideas of how even to get a more diverse founder portfolio. Do let us know, because it's great. You know, we can only build a stronger ecosystem through sharing ideas and having these conversations.
Absolutely, absolutely. Ninad, what about you?
Well, I wish I could tell you that there's some grand strategy behind, you know, us sourcing clients, but I'm a recovering attorney, and you know, going to a biggest law firm in the country is always my first step. Sorry. Lawyers know everybody, and everybody will need a lawyer at one point in their life, especially entrepreneurs. So, and they really know everybody, and you just start there, and you get introduced to one person, then another. I mean, it's literally been like that, and I've done business in 25, 26 different countries in Africa, and it's always a starting point. The second tier is bankers, because I was a banker too. Bankers, that's what they do. They give loans to companies, and they have great information about what's going on in a particular area. And again, we have a lot of referrals from bankers who cannot fund deals, especially, and this is my professional mission, by the way, as you, when you introduced me, you said access to finance to underprivileged entrepreneurs and small and medium-sized enterprises. To know you guys all and myself, I mean, it's really not easy to get to VCs and PEs, especially abroad. You need to belong to a certain class of people to have access to these resources, and many people don't. Unfortunately, VC, especially circuit, is very incestuous, if I may use that word. Many people would invest in only in circles from their universities or their clubs, or you know, wherever they're from. And if you don't have access to anyone who belongs to those circles, it's almost impossible for you to get funded. So, and by the way, and this is not only in Africa, this is United States as well. When entrepreneurs need money, their first stop is a local bank, and they would go and say, hey, I have this great idea, I need $15 million. And they go like, okay, that's not gonna happen, you know. But here, they can at least, you know, refer you to one of the angel networks or VC networks, depending on how much money you actually have available to get funded that way. But it's those people who can't find those networks or do not belong to those networks. I search for those specifically. And I do have sources here in the United States and across the world that would actually support causes like this. They're not conventional, they're not organized, but there's money available. If you know what you're doing, you will get funded. I always say this.
I mean, some fair points there. I think that's probably the sentiment for a lot of people around VC, that it sometimes feels like a club and it's kind of hard to get into, it's hard to get connected, so it's probably the sentiment. But Eric, I know you wanted to add something to that too.
Yeah, so this is a problem that I realized very early when I got into investing. And so we have an asset that we built over the years to solve this problem, which is that investors roll in a certain network like this, and then entrepreneurs roll in a parallel network. And those two networks don't talk to each other, except your next founder, you know. So I kind of figured that probably, you know. So we started something called Angel Fair Africa. So this is how I really got, when I decided to take investing seriously, 2013. So we launched an event where every year we select through incubator accelerators, and also we're on the ground. So we work with all these guys, innovation hotspots, right? We tell them, give us your 5 to 10 best entrepreneurs. And because we know the investor network, we also invite investors who want to invest in these companies, right? And then we select a city in Africa and we go there. And we've managed to create a formula that makes deals happen. And that formula is around making sure that there is between not more than 100, 120 people in the room. There are more investors than entrepreneurs. The entrepreneurs page, so similar to a room like this, right? And the people here will be entrepreneurs telling their story, how they started. It's not like a formal pitching, right? We tell them, come and tell your story. Why are you doing this when there's a million things that you could do? A lot of investors then connect emotionally with the entrepreneurs, right? At an early stage, most investing is you're backing the jockey, not the horse. This is what Esther Dyson, who was my mentor and says, so my boss, she mentored me into investing, told me, said, at an early stage, you are backing the entrepreneur, not the business. So it's really that emotional connection that you make with the entrepreneur. And the nexus of making that connection is the story around what they're doing. Why are they doing this? And and for those of you who are founders in the room, the most interesting connection you can make is when you tell the story of you solving a problem that you encountered. Most greatest businesses in the world are founded by people who started solving problems that they encountered or a friend encountered or family. There's a certain emotional connection to that, and that becomes a very strong foundation. A lot of the entrepreneurs don't tell that story. They want to tell the big picture and the numbers, and I'm trying to do the MVP. No, tell the story, because that already gets you a connection with, most entrepreneurs I've invested in, I've connected at that emotional level. Either I've seen the problem, or I've encountered the problem, or I've seen somebody who encountered it. So I immediately know that if you succeed, I will solve a problem that I need or somebody that I know.
Makes sense. And I think that that's probably a great way to end, and then we'll open it up for 1 to 2 questions, again, if they aren't going to yell at me to do it. So on that same point, we'll go to everybody, and then I'll open it up to the room for 1 or 2 questions. The question really is, again, you've got entrepreneurs in the room, potential LPs, potential future GPs, right? So tell them a little bit about when it comes to disrupting the model, which is what you're describing, right? Like, how do you disrupt the model? Just talk a little bit about how can we create greater collaboration, right, between these different stakeholder groups than maybe we're otherwise thinking. So I think you had that point, but anything more that you want to say there, and then Dr. Franny, over to you.
Right. So, one of the things that I've learned is that as an investor, this investing game is extremely humbling. And you need all the other stakeholders in the ecosystem. Mm-hmm. If you make a mistake and think that the provision of capital solves every problem, you're wrong. I've studied and seen funds, people raise $1 billion and they thought money solves everything. And they blew through $1 billion in Africa and said Africa doesn't work. Because you went into Africa thinking your briefcase was the most important thing, not realizing that the ecosystem and the other actors and the players are as important as the capital that you bring. So we really value ecosystem building. Actually, we fund Angel for Africa. The second part is that when we do it, we bring, apart from investment entrepreneurs, the other people in the room are the ecosystem players, right? It's so important that you understand the development of the ecosystem in which you invest in. If you invest without developing the ecosystem, you get stuck at some point. So we put as much premium in developing the ecosystem, developing the services that entrepreneurs need alongside the capital. And this is the things that we call capacity and community. So bringing the ecosystem together is very important. And working with the various actors and making sure that you are very clear on the roles that they play, the limits that they have, and how that intersects into your investment activity is super important.
Makes sense, right? Money is a commodity, right? So there has to be more to it than just that. Go ahead, Dr. Franny.
A couple of quick points. I think what Eric just said on the ecosystem side, I 100% agree with that. And for us, that plays out mostly in what we're doing in sports. Because to go from 0.5 to 5% of GDP, you have to build the ecosystem. The second strategy we follow when you have to bring the GP, LP, entrepreneur together is a very simple thing we do, which is test, learn, and scale. When you're testing, you can bring the parties together because the competition level is low. When you're scaling, that's when you really have to pick and choose. And so by splitting into the test, learn, and scale, you're able to build the ecosystem when you're testing, because you have kind of like a sandbox environment. You are all learning together. And then you split up when you go then to the scaling side. And that helps a lot to get to know each other. It's like speed dating, and then you pick and choose whom you want to have a long run relationship with. And then the third thing we do, because most people need financing, but they don't know where to go and get it. And if you talk to lawyers and banks, which I agree with what Nenad said, you get a lot of information. The crowd that we hang with are not in that space yet. So we walk the streets, because that's where you find your micro enterprises. We run competitions and make fun activities where people can come forward, and you then find out who's doing what. And then the third thing we do is what we call embedded finance. So let's say you want to support farmers who grow strawberries for fresh sales in a supermarket. You start with the supermarket, and you identify all the farmers, and they are the ones that need the financing. They need it for packaging, for transport, etc. So you use that structure to identify those who are the ones who need the financing that you are offering. And I think those are the three additional things that we use that complement very much what Eric just said. And I'm very happy, because we were just talking about it during the break. I know well how that network works, because we have a common person who is part of this network of venture capital plus entrepreneurs and the whole ecosystem play that needs to grow.
Definitely, definitely. What about you, Carissa? Yes?
Yeah, so getting back, we model the behavior that we want to see in the market. So and I think it's incumbent upon us as investors and as VCs to be open and transparent. So when we want to bring in a co-investor to one of our potential investments, share due diligence, share the investment memo, make it as welcoming and as inclusive as possible. It's hard enough for our founders to raise money. It's hard enough for them to scale. So we want to make the investment process go as simplified and as easy as possible. So we hope then by being model investors, and yes, there's always room for improvement in this process. It's a learning journey, as we all know, that we can bring the best co-investors in to help grow our portfolio companies. And so I think it's modeling the behavior that we want to see in the market and making sure that we hold ourselves to higher standards, because that's the best way to grow this ecosystem.
Absolutely, absolutely. And lastly, Nenad, you. So again, the idea is just ending on collaboration. We've got some potential people here interested in the space. We've kind of gone and gotten some ideas on how to build stronger partnerships and collaboration in the ecosystem. We're ending with you. Any other ideas?
Next question.
That is the question.
Well, you have to collaborate. Well, I don't play classic VCP game. Most of my collaboration with those entities comes from working jointly on mostly on project finance. I work a lot with private equity and venture capital, more private equity. They knowing what they need and knowing about a project that you're trying to you as someone who pulls resources together, you need to know what the project requires and then find the right partner within a certain fund that you can talk to is kind of what I do mostly. And who these people are, it's mostly people that I've worked with before. There's not really any collaboration platform for these people, because let's not forget, this is all about money, and people compete with each other, and they will collaborate only if it makes sense for all the parties to make as much as possible, because we all have investors that we're accountable to. We have to return that money, and collaborating sometimes makes sense, sometimes it doesn't.
No, that's fair. I mean, the reality is VC, you're in it to make money, but I think that some of the ideas that were shared also on ways in which we can make it more collaborative and create more partnerships that were shared are definitely important. But recognize your point is completely valid, right? Money moves the world. Do we have time for questions? No, we have no time for questions. We need to get going. Just want to give a great round of applause again to our panelists here today.